broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. Welcome to a live version. This is usually the Sunday is a repeat version, but this is a special live show. We wanted to do a live show because what's happening in Iran and kind of keep you informed. The Max Out Savings Show is a show all about saving money, building up wealth, dealing with retirement, and understanding very complex worlds that we live in today. Our motto in our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth over the long term. We live in a very uncertain world. The United States, we have $2 trillion deficit every year for about the last 4 or 5 years, and our debt levels are now on the national debt about $39 billion. And we live in an unstable world. We have a President Trump, who's moving to change things up, bringing the manufacturing back to the United States, reordering the country, figuring out ways to be how we can pay this off and grow the country. But at the same time, we live in a very volatile world, and we've seen this today. With the war with Iran. I went off Friday night, and they were negotiating. The Iranians clearly didn't want to get up the nuclear weapons. A couple thoughts, just to start from the beginning. We were negotiating with them. Clearly, it went on and on. Simply, they did not want to give up the ability to enrich uranium. And I mean, people forget, these people have been funding terror groups all over the Middle East. They were responsible for hundreds of our American Marines being killed in an attack in Beirut, decades ago. But it's been one thing after another. We've tried all basically we want is peace in the region. Everyone gets along. Even the Israelis are managing to get along with many of the Saudis, the Qatar, all these people in the Middle East. They're trying to get along, and then you have Iran, the outlier. And the problem is they want nuclear weapons. They want death to America. And we live in a very complex world. We live in an AI world. And that runs on massive amounts of energy, and it's all interconnected. In that type of world, it can be utterly obliterated with a few weapons of mass destruction very quickly. And the United States can't take the risk in the world today with having some lunatic on the other side of the world dealing in nuclear weapons or nuclear attacks or other things. Our society is much more complex across the board. If you look in the 1950s, they had a plan to survive a nuclear attack with multiple bombs falling all over the place in the U.S., and the U.S. would have probably recovered pretty quickly from it and gone forward. But when you live in a world today where everything's interconnected, everything's electronics, everything is concentrated, just one nuclear weapon can obliterate the entire United States in a matter of instances. And by the way, you don't even need a delivery system. I can design that on the back of an envelope very quickly. I mean, and so we live in a world where we're vulnerable, and we have these basically a bunch of just fanatics over there that something had to be done. Hey, I'm not a big fan of attacking Iran. I don't know what you do. People just want peaceful, but this is the world we got. This is what we have right now, and we have to deal with it. So here's what is the situation. And we're going to try to cover that, try to come up with some of the outcomes, and try to how is this going to affect your retirement? And what we looked at is a couple things. This caught a lot of people off guard, including I think more of Wall Street than people think. Although my sense is for the last 3 or 4 months there has been massive distribution of the big tech stocks and in the market, and distribution is selling by very large players. We've been talking about on this show for months how there seems to be a very substantial sellers in this market. And, every time it's about to break down, they come in and let off the selling and it goes back up again. That's not a good sign. But but this caught people off guard. It's a very substantial attack. It's a very complex attack. They started. Reason we do attacks in the world today on Friday night is everybody wants this wrapped up before the markets open on Monday because everybody is fixated on the stock market. 25 years ago, 30, nobody cared that much about the markets. If it went up some, they were happy, but the health of the United States didn't depend on it where it is now. But one thing you must understand, and as I said, we live in a very complex. We're living in a transitioning world, and what's happened is China has taken our factories away, and they've done this so they could, to get jobs for their people. And so what we did is, well, you can't have manufacturing in the United States. We're going to have service jobs in the United States. We're going to have financialization, which means fortunes can be made on Wall Street by buying companies and firing workers. You can shut down the factories in the U.S. Get your product done in China or elsewhere. Or you can, if they have 4 or 5 factories, what you can do is if you got 5 factories, you can shut down 2 factories and just make 3 factories, and it's an overconcentration and risk there, but your cash flow goes up, and then you can pay out. You can take the company private, with private equity people, and so cash flow goes up, margins go up, stock buyback programs go up. That's the way you make money in the United States. What is the United States? Well, we're built a country that we're nowadays we're building it on financialization and that is not a good thing. And so it's the same thing with services. Oh, we just have services. We won't make anything in the United States. We'll just have services. Well, AI just popped up on the screen, and it's going to wipe out the service industry. The one thing that it can't wipe out is the manufacturing sector. It's much harder. We're going to have robotic factories, and they all have to be serviced by people, and it's going to be more jobs and everything else. But we need the factories back here. So we're getting the factories back here. Well, we have the country for the last 20 years, particularly the last 10 years, is private equity people have been scouring the United States, buying up companies, trying to find companies for people to sell them so they could take on a bunch of debt. They could sit there, go in. I mean, it's almost a running joke about the Whataburger or this business or that business or the veterinarian or the local dentist. They're all taken over by private equity, and then the prices of everything goes up. They fire workers, and so they can get their cash flow up so they can repay the debt. Well, that doesn't create jobs. That creates wealth for a few small people. That eliminates jobs. That reduces the quality of the business, and it also shuts down manufacturing and everything. Well, that world is coming to an end. So we have a problem with all this private equity. People are now realizing it's kind of a disaster. In wealthy people were all investing in private debt, and then they started giving it to less wealthy people and putting funds out there. Hey, have you tried private debt? And at Max Out Savings Advisors, we talk to these people. I remember talking to Carlisle last year. It's a good group. I'm like, look, we're looking to see what you have, and they're like, well, the market's down 20% year to date, and our fund is only down 3%. I'm like, well, how is that possible? Everything else out there is blown up. And I realized that these people aren't marking their loans to the market. So they're just assuming they're all going to be paid off unless the customer shows real financial distress. So basically they go from par to 70, 60, or 50 almost overnight. So that's a bad, that's not a good situation because you never know what you're really are you investing in good quality bonds, or is the company in trouble and you're just having to pay the price that everyone else is already in the fund is getting. So a lot of people, particularly wealthy, smart people, have been kind of duped into buying a bunch of private debt. The classic example is Harvard University. Harvard went on this Islamic anti-Jewish rant, and a lot of the Jewish backers said, "Hey, I'm out of here. We're not giving money." So they needed money. Well, they had a $70 billion endowment for the rainy day. The problem, a huge amount of it was in private equity. They couldn't get their money out. So now investors all over the world are scrambling about private debt, trying to get out of it, and they can't get out of it. They're trapped. Now, We're going to talk about that here a little later in the show, but I want you to understand that's a problem because that has suddenly just cropped up. We just had a financial company, Market Financial Solutions, out of the UK fail, $1.8 billion private debt company fail Friday, and this caused the banking index fell 4.85%. The mid cap bank index fell over 5%, and the financials started breaking down across the board as people are concerned about the private debt area. And why this is important is, remember what happened with the great financial crisis. It was housing debt. And we wrote about it, and if you're new to the show, we write a report once a month. We sent out a special bulletin yesterday. It's a free report. Go to maxoutsavings.com. In 2007, we said the investment banks were going to fail. They were having problems with the debt in the housing market. These companies had loaded up on huge amounts of debt. We put little pictures of the balance. We put the balance sheets and simplified versions of the balance sheet on the report, saying this is what's going to happen. We had top strategists to Wall Street firms. They get our report because we got that ahead of almost everybody else. Well, it's the same thing today. Instead of home loans, it's private debt, and now that's tightening up in the market. There's a problem there, and everyone's scrambling to get out of the market. That's not priced in the market yet. But at the same time, this has been happening this week, and at the same time, what has happened, and by the way, private debt people, I mean people like private equity and debt is people like BlackRock, Blackstone, KKR, those type of companies. There's Carlyle. There's a whole bunch of them out there. There's thousands and thousands of private equity firm and private debt companies out there. They're trying to either lend to private companies or they're trying to buy them. I give you an example. We get phone calls all the time. Ted, would you like to borrow money at Max Out Savings Advisors? We'll lend you some money. Well, if I go to the bank and get a loan, years ago we went banking, we're starting a company, got a loan. They're like, Ted, how much is the company worth? What are your revenues? What's your profits? We need to see a financial statement. I go in with a huge pile of paperwork for not that big of a loan. Well, they're calling me up. So I called them one day. I said, okay, well, how much is it? So they give me how much it's going to be. And the loan is like 13% or something. I forgot what. It actually was a little less than that. And I said, look, I really don't need the money right now. We don't need the money, but thank you very much. They continue to call me for 2 or 3 months just to give us money. And they're going all over the place trying to find companies to lend money to. But the problem is, rather than using the money to build a new factory, open a new office, plant equipment, the private equity people were using that debt to buy companies and lever them up, and that's the problem. Now, so here we are today. We got that problem suddenly cropping up. Well, at the same time, we just had this attack on Iran that's completely out of the blue, and so this is putting further pressure on the markets here, and kind of at the wrong time. The markets are very expensive. We already seen the Mag 7. Most of the big Mag 7 stocks, the big tech stocks, are selling the same place they were 6 months ago. Yeah, 6 months ago. They haven't gone anywhere. And so we have a very expensive market. We have a shifting economy. We're making a transition from a services economy, private equity, private debt, financialization economy back to a manufacturing economy. Because that is causing a lot of shit. That's why we needed the private equity guys to do these financial games all over the place to keep the thing going. We don't need financial guys to put in a factory. We don't need financial guys to put in an AI center. We don't need financial guys to build a defense plant. Okay, we need skilled craftsmen. We need engineers, and we need technological experts. We don't need any financial MBA experience. And so that's a change. So that's affecting it. Well, right as this change is happening, this Iran war starts. And that is the problem. And that's what we're dealing with now. Now, we're going to give you some of the thoughts on this Iran war, where it's going to go, how could they affect the markets over the next couple of weeks, right after this quick break right on the Max Out Savings Show on how to protect your retirement in this environment. We'll be right back.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
This is the Max Out Savings Minute with Ted Gioka. Ted, the Supreme Court has ruled against the president on the tariffs. What say you?
This is a disappointment. One thing you have to understand about these tariffs is the centerpiece of Trump's plan to reindustrialize the United States. And by that, I mean, what he's using is he's bumping the tariffs up to force companies to bring factories back to the U.S. And then he made them higher than they would be, saying, look, if you don't bring the factories back, these are going to be the tariffs. So companies are bringing back anywhere from 500 to $1 trillion worth of factories over the next 5 years or so, which is an enormous amount. It's really kind of the reindustrialization of the United States. But understand, these tariffs are critical to the reindustrialization of the United States and stabilizing our borrowing and our debt situation. So this is a big deal, and it's disappointing the Supreme Court did it.
Well, there you have it. That's one of the many things we'll talk about this Saturday morning at 10 o'clock on the Max Out Savings Show on AM 1070 and FM 103.3. The Answer. Ted, thank you so much.
Thank you, Chuck.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're doing a special live show today on Sunday because of the Iraq War. We wanted to get to you. We typically run the show on Saturday at 10 a.m. and then repeat on Sunday. But and if you got any questions or comments, since this is live on Sunday, you can give us a call at 713-339-1070. The Iraq War. What do we do here? This is how I read. This is what I'll read. The Iranians really misjudged this thing. To me, it was very clear that the Israelis made it very clear that they were serious about finally dealing with Iran. If it had me after they were attacked by Gaza, I wouldn't even have gone after Gaza. I would have just flat out straight attacked Iran because that's always been the problem. And I believe they believed that they had Trump's support, which is very rare. If Trump loses the midterm election, they're not going to have the support. If something else happens, they're not. This is a one-time chance they had to go after Iran with America's help, and so Trump tried to negotiate. I mean, anyone with any common sense would have seen this, and the Iranians should have realized that these guys are very serious. You've got a chance to get a deal, but you're going to have to make concessions and reform the country. And actually, they had a model with Venezuela where they Trump left some of the group in charge, put a pretty responsible the vice president in charge, and just said, look, laid out a few things we want, and with the promise of elections in the future. And they had that opportunity, but they just they couldn't take it, and I think they saw the negotiations weren't going anywhere. I think the Iranians were trying to drag it out, and we had an enormous fire. We laid it out on our Max Out Savings Report. They had hundreds of fighters. They had 85, I think I want to say 85 KC-130 tanker jets. They had AWACS systems. It was just an enormous buildup, and now that's been turned against the Iranians. So what do we do right now? The latest is Israel's under heavy bombardment tonight as we speak. Enormous numbers of missiles are coming in. They've also attacked Bahrain. They've attacked Kuwait. They've attacked the United Emirates. They've attacked Saudi Arabia. They picked Qatar, Jordan, Israel, and which I think that was a mistake. I think they're hoping that these countries are going to pressure the U.S. to give in. But the problem is the U.S. now, if the Gulf countries pressure the U.S. and the U.S. backs off, anytime there's ever an issue, the Gulf countries are going to be threatened by Iran, and so the U.S. has to maintain. We can't let that happen, and so it was really a mistake on their part. To do this, I believe, and so we're going to continue to push forward. The couple questions is are there? Look, there's millions of Iranians in the United States. They even caught Iranians on the border and many others that they figured were terrorists, and they still let them in the country. They didn't even turn them around. So we just had a terror attack last night in Austin. Looks like they had one in Washington today. There's more, and you don't know. Look, those are the dumb attacks. The question is, are there smart attacks out there? Is there something else brought into the United States? And that's what we're not sure of. That's a danger. And I think that's one of the things. What other damage can they do? The other thing is, can they close down the Straits of Hormuz? Look, they've effectively done that, because to go in there you need insurance, and none of the insurance companies are going to write anything. So there's no one's going to put a ship through there right now. So it's effectively closed, which is going to push up energy prices. And the other thing is, everybody's concentrating on the Straits. That's the wrong thing to look at. What we should be looking at is the energy facilities in the different countries, and I'm not going to name any names in this case, but the loading facilities, the gas trains, the storage areas, the key pipelines. Okay, those, if some of that stuff goes up, it could take a year or two to get some of it back up to full steam. That's the real danger in here right now. And the Straits, they can be shut down for 2 weeks or 3 weeks, and they're reopened, and it's business as usual. And that's what nobody's talking about. That's what they're afraid of. The other thing is, what is China going to do? And if you look at Venezuela, President Trump, went and basically got Maduro out of there. He's got a group that's more sympathetic to the United States. The U.S. is going to bring in our companies to try to help the Venezuelans develop their energy as they have. If they look next door to Ghana, Exxon's done a wonderful job of developing the Ghana reserves over there in that field. In Ghana, and not only that, they're helping train the people in in Guyana to work in the oil field. They're putting in infrastructure. They're helping build out the country, and the same thing can happen to Venezuela. The big loser is China. China was buying big amounts of discounted oil because they were under embargo. It was a good deal for them. And so they've lost that. Now they're losing the discounted oil that's under sanctions as well from Iran. So they're losing some of their key people. So what do? Do they sit? They're back on their heels in China to some extent, and their economy is in bad shape. It's over-levered, massive debt issues with real estate, massive debt issues with companies, and many of them, they're selling product. They're not making any money. Keep in mind, the U.S., our markets, equity markets, we have record margins. The margins are horrible in China. They're not making any money. So that's dangerous. Do they go in and try to support Iran? Do they try to come into Taiwan? Do they try to make some type of moves? Hopefully some type of deals maybe were made where, look, we're not interested in Iran. If you guys want to keep getting all there, we don't care, China. I mean, so you want to just watch and see how that's going to play out with China vis-a-vis Iran, and so those are some of the things we want to watch. I think they were kind of hoping Iran would collapse pretty quickly. It clearly is not yet, and they're throwing gigantic amounts of. We'll see what else they have. No one really knows what they have, and Iran is cornered. They're losing, and they're dangerous, and that's what you got to watch out for. And so we want to watch that. Are we going to eventually get this solved? Yeah, the question is when and how. It's likely going to take some time and to do this. And so we'll just have to kind of see how it plays. But this is a big issue. There's 90 million people in the country. It's a massive country. And what the U.S. appears would like to do is they'd like to kind of use the Venezuelan model, because the failure of Iraq was they go, okay, Saddam is gone. Anybody that dealt with Saddam Hussein, we want gone. Well, Saddam Hussein, say what you want about the guy, he built up a modern country there, and it functioned reasonably well. It was, it was a dynamic country, and they had, technocrats and people running things in the country, so it ran. Oh, well, when you get rid of all those people and put a bunch of idiots in there that have no experience, the whole thing collapses. So they don't want to do that in Iran. So that's why they're trying to say, hey, there's going to be an amnesty. I'm sure they've talked to the Republican Guard. The Republican Guard, they control a lot of the industry in Iran nowadays. And so I'm sure they're going to them going, look, guys, if we can just get along here, we're all willing to step back. And so those are some of the things you want to watch. And so, what's going to happen there. Now, the question, I'm getting a lot of questions. When's the market? What's going to happen Monday? Unless something magical happens tonight, I think the market is going to be in some trouble. Most people in the market really, I think, we're expecting another week or two of negotiations, and they caught somewhat flat-footed. Although I said at the beginning, there's some really wealthy people who've been unloading massive amounts of stock for about 3 or 4 months, likely in anticipation of this. So a couple things are going to happen. The big institutions are going to be under a lot of pressure not to be dumping stocks Monday morning. The phone calls are probably going to be going out tonight. And so after a sell-off, I'm already seeing on X some people saying, hey, the market's going to sell off and then rally later on. It's a tough decision. As we said, oil, if this thing is solved tomorrow, oil prices could fall apart. Trump has been pretty smart, because you remember when he captured all those Venezuelan oil tankers. I'm like, why are you wasting your time with these tankers? We're going to keep them and we're going to sell the oil. Well, it looks like he parked all those tankers near refineries here, so we have extra oil in case something happens. But oil could fall back down because there's a lot of it in the market. But if, like I said, and I won't even name the targets over there. I'm sure they know who they are, but there's ways you can shut that production down for quite a while in the Middle East. And so that's what they're not sure of. So you're getting some more of a premium on energy prices. Same with precious metals. That could, if the war is over, there's not a problem. You can see oil, gold, silver, some commodities sell off on that news. But we still have our defenses are badly weakened by these wars. We don't have enough capacity, and our defense companies have been just almost criminally, not criminally, to be fair, but they've just been utterly incompetent. And they've been doing the same thing the private equity guys is. They've been barely running their stuff. They're running the factories at capacity. Well, and quite frankly, they should have built another factory or two for a lot of the products out there. Instead, they're running one factory 24 hours a day, and they can't produce the munitions we need because it's cheaper to sit there and run one factory, get more cash flow. You can buy back stock and push the price of your stock up. When they should have been building another factory, which costs money, which means your cash flow goes down. But then maybe it wasn't running at full capacity, but it was running a day shift, and then during the war they could have run those. And so Trump has told these defense companies, look, you guys have got to start building out more factories. You need to cut out the stock buyback programs, cut back on dividends and executive pay, and instead put it into plant and equipment. So all of that's going to continue going forward. If you had to ask me, I would say, look, this war is going to end. It's going to end sometime soon, and the market's going to go up. Even if it ended Monday, the market's going to go up. Here's the problem with this market is it's what we talked about at the beginning of the show with this private equity situation. We have different markets. We have the Treasury market, which is the government borrowing from people, so they have Treasury bonds. Those are the safest. And we have corporate bonds as well. You've got investment grade junk bonds. It goes up and down the scale. We really like high grade corporates that aren't financials. That's one of our sweet spots. We really try to buy stuff that can almost withstand anything because our clients, we manage clients' retirement money, and we really are trying to always figure what can go wrong because they have to live off of the money that we invest for them. This is their savings. It's not some play money out there, and so we tend to be very conservative with our bonds. And then then you have bank lending, and then underneath that you have private debt, which tends to be risky junk bond quality debt out there that with smaller companies and different things. It's interesting. The junk bond market started. Michael Milken built it out. Brilliant guy. And he did the research, and he said, look, these smaller companies are actually really good debt because they never, they just stick to their business. They're pretty conservative people in the business as well. And so Moody's and S&P rank these things as junk, but they're really much better quality, but it's just they're small size. And his papers and then built the junk bond market up. Well, what no one understood was that was looking at companies that are just running their companies, building out their companies, borrowing money to put a new factory in, saving money, having a lot of money in the bank. No one figured that, well, you can build a private equity business on it where you can take the same company, use Michael Milken's research on how safe small companies are, and instead of building another plant or factory, what you do is you take on a bunch of debt and buy back stock or take the company private. So the private equity guys are the ones in trouble. What do we say at the beginning of the show? We're shifting from a financialization, stock market, services economy to a manufacturing economy. And there we have to build out plant and equipment. And so a lot of this debt is now gone bad with artificial intelligence. All of a sudden, some of these quote services can be replaced with Grok in like 2 minutes. So there's the issue. So the issue right now is private equity is in trouble. The banking index fell, as we said. The bank index fell about 4.85%. The regional bank index 5-point-something%. People are nervous. If you look at like BlackRock, Blackstone, some of these companies are off 30%. Blackstone's off 30%, Carlyle's off 20%, KKR is off 35% off the highs. So these guys are all, they're starting to really sell. There's a lot of pressure in it. So if I would say if there was no Iraq-Iran war, based on what happened with the Market Financial Solutions, MFS collapse in the UK, and the problems with Blue Owl, and the problems with some of the other funds out there with KKR and Blackstone as well, suddenly cropping up some of their smaller funds, I would say Monday's going to be a pretty bad day based on that issue. And we're really seeing these indexes start to break down. But now we have the war situation. Well, that should be bad too. But remember, when there's a war, they're going to try to stabilize the market. Nobody wants it to completely fall apart. So it's a little difficult. But you should have a higher level of cash. One of the more fascinating things about this market is mutual fund cash is about 1.1%. I'm not going to tell you how much cash our clients have, but it's an enormous amount in money market, treasury bills, those type of things, because we've pulled a lot off the table. We're very cautious. Well, the problem is, if we're looking Monday or next week, we might see buying opportunities and we can put our cash to work. I mean, we haven't made any decisions. If I'm the mutual fund company, I got 1.1% cash. I got a bunch of people suddenly wanting to cash out. I've got to start dumping all my stocks, at the worst possible time because I've been imprudent with my cash levels, and so this cash level is a big deal. I mean, if you look at the numbers, it's like I said, it's at 1%. Back in it was at 2.6% in 23 when we had a bad year then. In 2020, it was at 2.8%. So these guys, they're going to have to increase cash just because they're going to have people wanting their money out. And so again, I think based on what we're seeing with the private equity issues, I think you got to be careful going forward. I think the war there's a lot. Look, I think that we got a good chance that this thing works out, but there's also some really bad scenarios that can suddenly creep up. And if the financial industry is sitting at 1.1% cash in mutual funds, these guys aren't prepared for any bad things to happen at all. And that becomes the problem. Again, when you're managing retirement money, when you're managing big conservative, you don't want to be speculating. One of the big secrets is the real wealthy people, they love to talk about a private equity fund or a little bitty tech stock they're in at the cocktail party. They love that stuff. Well, they never tell you that the majority of their money is in short-term treasury bills. It's in municipals. It's in blue chip stocks, and it's pretty mundane because they're wealthy people and they don't want to lose the money. And that's a mistake a lot of people make is they don't understand wealthy people that have saved a lot. They're not in there to go speculating on the market with all their money. They're much more cautious people. And, when you watch CNBC in there, you're going on 24 hours a day about AI and in some tech company, they make it sound like everybody's got all their money in the world. And NVIDIA, people don't. They have a lot of money in there, but they've got their risk spread out. They're cautious. They're wealthy. There's a reason that they're wealthy, and they want to protect it. Anyway, let's take a quick break. We'll be right back right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues. And that's where Ted Gioka can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 1033. The Answer.
I'm Ted Gioka, and I approve this message.
Max Out Savings is looking at rising interest rates, the bond market, and our country's spending to project the impact on your retirement. They use that data to help you flex to current conditions with your future in mind. Call 713-627-0400 to learn more. That's 713-627-0400 or MaxOutSavings.com. Remember, you can hear the Max Out Savings program right here Saturdays at 10 a.m. on AM 1070 and FM 1033. The Answer.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, MaxOutSavings.com. That's MaxOutSavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, MaxOutSavings.com.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to a special Sunday live edition of the Max Out Savings Show. This is live, and if you got a question, give us a call, 713-339-1070, and we'll try to get your questions answered. Typically, we're live on Saturday at 10 a.m. talking about big issues. A couple ways you can participate in the Max Out Savings Show. We've been on the air for over 20 years talking about investments, retirement, understanding the world. We're trying to bring you stuff that other people aren't bringing, trying to get you ahead of the game. We send out a free Max Out Savings Report. We send it out once a month. This month we've sent out a couple already, but talking about these big issues in the world, just go to MaxOutSavings.com. That's MaxOutSavings.com. You can sign up for the free report. It goes on our list. It's a private list. We're not calling. We're not bothering you. You're simply signing up for the newsletter, and that is it. So if you need some help on some of this stuff, go to maxoutsavings.com. You can also get our phone number and email. Drop us an email if you'd like some help. We manage retirement money here at Max Out Savings Advisors in Houston, Texas. So if you need some help, go to our website, maxoutsavings.com. A fascinating story came out at the end of last week. Block, which is this company Square, symbol, I think XYZ. XYZ, run by Jack Dorsey, is laying off 4,000 people, and you're like, wow, that's a lot. But even more concerning is that's 40% of their workforce. And what they're saying is they're saying with AI, they think they can replace a lot of these workers with AI. And so that's a big problem. And this was a real shock to everybody that saw the story because, look, Block might be somewhat of a anomaly in the market, but there's a lot of companies out there all looking, their executives are all looking. The one thing corporate executives in corporate America know how to do today, if there's one thing, it's how to cut costs. Yeah, and, very few executives are like Elon Musk and some of these others. Hey, we're going to build another factory. Let's put a gigafactory in Memphis. We're going to put up another launch pad for the Starship in Cape Canaveral. Let's launch another 5,000 satellites to build out our the Starlink program. But with all those things out there, what you're looking at is, most of these guys, they're good at cutting costs. They're not good. I mean, again, I hate to keep harping on this issue, but it's factories, it's production equipment. We've been using $500 billion in fact. Trump's using 20. I think I think our number is very low. We need people that can build factories, engineers. We need craftsmen. We need specialists. We need machinists. We need technologically good people. We don't need financial MBAs, but all these guys are. So they're all going, hey, we need to cut costs at the company level. What are we doing for AI? They want all these programs to do AI to fire more workers. And so if every company out there suddenly decides to let go of 5% of their workers, we have a real problem in the United States of America. Never mind 40% of their employees like Block. And this was a big shock. People are realizing just how incredibly powerful AI is. And how it's very disruptive to lots of industries. That's what's kind of blown up the private equity business, because they get all these companies, these small software companies were coming up, but they can all be replaced by AI now, and now the debt isn't worth what it once was. So in this world, what you want to do is you want to be in things that are making machinery, equipment, energy. Look, 4 or 5 years ago, everyone was talking. Remember Larry Fink at BlackRock? They were gonna defund the state of Texas and the energy business because it was all going away, and we're going to reduce CO2 emissions, and we're going to have to use 30% less energy. Probably by in the next 10 years, we might have to grow our energy 50% or more to support this AI. So we know energy, we know production, we know utilities, we know those things are going to make money. We know delivery companies. These are concrete things. Trains, all those type of things. That's going to work. But the other stuff, the services. This is why. So it's but if everybody starts laying off workers for AI, it's a problem. It's an incredibly powerful thing, but it's also a huge energy hog. And so that was a shock. So we've got 3 shocks to the market right now. We have the Iran war, which I won't say came out of nowhere, but I think a lot of people were hoping for some type of quick solution. And even then, maybe it was a quick bombing run, and people are suddenly realizing that Iran is not just going to be a bombing run, because they've already hit, they hit the UAE, they hit Bahrain, they hit Qatar, they hit Kuwait, they hit Jordan, they hit Israel, they hit Saudi Arabia, and so they're dragging so this has become a regional war. And the question is, what's China going to do? What else does Iran have that we don't know about, or at least we've not heard about in public? And so That's suddenly become a real concern. At the same time, they're having to deal with the private debt issue out there, which is to private companies or it's more to bigger companies, but it's riskier debt. All of a sudden, that's a problem. Now, if you're trying to figure out where to place your money, you're hearing about all these problems with private equity. Are you going to sit there and lend money to KKR or to Blackstone or Carlyle? Or you're going to go, I'm staying away from the whole thing, and so that's going to pull liquidity out of the market. And keep in mind, what have I just said? The $1.8 trillion market financial solutions blew up. Blue Owl Capital has having to gate their funds and having everybody wants out. There's people calling up Blackstone and Carlyle, the others, KKR wanting their money out. Well, and they're saying up to 15% of the private debt could be in trouble because of AI. Well, if you're a risk manager or a lender on the lending committee at any bank, in any fund company, anywhere else out there, you're meeting this week and going, what are we going to do about this? And you go, we need to become more conservative with our things. We need to tighten our lending standards, which means it's going to tighten credit across the whole country. So this is a big issue. The private equity is a big issue. The RAN is a big issue. And then the AI is the big issue. Where's all the money going to come from AI for the data centers? Oh, my God, Block, the company that has Square, just laid off 40% of the workers. What's going to happen to me? That's the third one. And how is that going to change? What businesses is AI going to disrupt and which is not? And so all of these things are kind of hitting the market. So we're trying to look at what do you do in this type of a market? And as we said earlier, higher levels of cash. We've been talking about having higher levels of cash for months and months and months. We've been saying commodities. We've been saying precious metals. We've been saying energy. We've been saying, look, you got to put all this electricity. The cheapest way, the quickest way is natural gas. There's opportunities. But the market, if you look at it, it's been this week, Friday, I went and just kind of relaxed part of the day just because I was tired of it going up and down all week long. It looked like it was going to break out and break down and up and down. It's trading between the 50 and the 100-day. If it breaks under the 100-day, it's likely to go down to the 200-day. So the market topped at about 7,000. And it really hasn't gone anywhere. It's kind of the same place it was back in October. And if it breaks the 50-day, just to give you an example, this is technical, but it's important to understand, is about 6,900 on the Dow. They're getting closer. And the 100-day is at 68.31. And the problem is, if it breaks the 100, it's likely to go down to the 200-day. I mean, that's the obvious line of support, which is really about 65, 6,600, and that's likely what you're going to see happen. And if you had to ask me, look, if it was just the Iran war, I'd say it sells off some and then goes right back. But with the private equity, with the big layoffs coming out of Block, and with the Iran war, it seems to me it's really hard to see how this thing doesn't go down and test that level. So you want to be cautious. And the other thing is, it's likely to drop interest rates. If you're the Fed, before you were maybe going to keep rates higher, they're much more likely to cut. Because what do we say? Most of the credit committees and the risk management committees at banks and mutual funds and big financial companies, they're all meeting this weekend, with all these issues, and they're tightening credit. They're tightening their standards up. And so that's going to tighten the credit in the economy, which is going to slow the economy. So normally I would say that, look, the minute the war's over in Iraq, gold and silver are probably going to plunge, but now gold and silver looking, here comes the Fed. They're going to come printing money again. So the other couple things you want to watch, saying some of the things you want to watch, does this spread to the oil and gas facilities in the Middle East? What does China do? The other thing we want to kind of watch too is, what does the Fed do in this environment? What are they going to start printing money again? Where's the Fed put? Okay, Kevin Warsh is kind of on record, the new potential Fed governor, and has to be approved. They would like a lower Fed put. They don't want to be having to bail out the stock market and flooding the system every time the market corrects 10%. Because remember, they're all about building out factories. They're all about building out financial, manufacturing facilities going under Trump's plan. That's why he has all the tariffs, because he wants to go, look, it's going to cost you 15-20% to put to bring it in, but if you bring it, if you guys can bring a plan in, we'll cut your tariff over there. You won't pay as much, and we'll have a factory here, and we'll all be happy. So one of the things we want to watch, is there a Fed put that's going to rush out and bail out the stock market? I lean toward likely not, because I do think I think they want to kind of lower the bar or raise the bar for a real financial crisis before they start flooding the market, because the problem is it could cause the dollar to fall way off. And so gold and silver are going to be watching that. So a very complicated market. Again, incredibly complicated market. This isn't a world where you have 1.1% cash in mutual funds, which is what we have near record lows. And so there's a whole bunch of guys on the wrong side of the trade in here. There's a whole bunch of guys, big people on Wall Street, that are on the wrong side. I mean, they're over-invested, and they're going to kind of scramble to see this 1.1% number. That's, my chart goes back to 2000, and it goes back 10 years. And this is the lowest level of mutual fund cash in 10 years. So again, this is why we've talked about it on the Max Out Savings and our Max Out Savings Report. You want to have higher levels of cash. You want to diversify your assets. You don't just want to be in the S&P 500 and in bond funds. You want to be in commodities. You want to be in overseas stocks. You want to be in a broad-based group of assets going to profit for the next trend. Because again, the United States in the last 15 years in particular has been all about financialization and services. So that was the way we made money in the United States. Running up stock prices, buying companies, taking them public, those type of things, services business, manufacturing is going. Now manufacturing is coming. That's a different trend, and it's a different investment philosophy. Anyway, we write a lot about this in the Max Out Savings Report. If you want a copy, just go to our website, maxoutsavings.com. That's maxoutsavings with an S.com. Just request a free report, and you'll be put on the list. And if you need help managing your retirement, you have an old retirement, if you're retiring or have a trust or something you need to manage, that's what we do. We manage money. We try to do a lot of risk analysis at Max Out Savings Advisors to watch out for our clients. So if you need some help, go to our website. You can get our phone number or email. You can request an appointment. We're here in Houston, Texas, is where our headquarters is. You'll meet with me. And I'd like to help you out if you need some help. So it's maxoutsavings.com. And remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. It's all about saving money and then conservatively investing it. That's the key to building up wealth. I hope everybody has a great weekend, and we'll see you next week right here on the Max Out Savings Show.